Everyone, and welcome to another ADSI, Aotearoa Divorce and Separation Institute webinar. My name is Kelly Sutton, and I'm one of the founders of ADSI, and I work as a coach, a mediator, a facilitator, and a collaborative professional under my company called SOS Success Limited. I'm delighted to be here tonight with Dawn Whiteside from Life Direct. And we're really excited at ADSI to have Dawn as one of our affiliate members on board with us. She's an experienced loan writer and has over 12 years experience in the home loan industry. She offers advice on the key points in the house buying process, the correct loan structures to meet each client's individual needs, and importantly, budgeting. Dawn specializes in, but not entirely, these other things she does, but she does specialize in helping clients going through separation and divorce. And she helps them keep their family home if that's one of the client's goals, or helps them transition into a family in two homes. And she also helps and guides first-time buyers through the financial maze to purchase their first home. And as we know, that can be a really important time when for the first time you're not buying a house jointly and you're doing it on your own, and it can be a really scary experience. I remember that, going through that. So we're really grateful to have Dawn here tonight. You can find her on her website at www.lifedirect.co.nz, or you can email her at dawn@lifedirect.co.nz. And you can also find her on our ADSI Institute website, where you can find all our qualified divorce professionals, certified coaches, and affiliate referral members like Dawn. There's a lot of practical resources on that website and a lot of links. So if whatever time you are in your separation journey, no matter what stage you're at, go on and have a look, and you may just find something that really helps you continue to move forward in the process. So Dawn will be discussing tonight's topic, which is mortgage brokers' tips in divorce and separation. Welcome, Dawn.
Hi, Kelly. Thank you for having me.
Oh, it's wonderful to have you. How about you tell us a little bit about yourself before we get started?
Absolutely, absolutely. So, yeah, like Kelly said, I've been in the finance for about 12 years. I did work at one of the fashion houses. Skirts started to get a little bit short, so it was time to move on. So I went and worked for one of the big banks out there, and this is where I sort of found my passion for the home lending side. So you go through different phases within the bank, but I found dealing with the home lending side, there were so many people out there and so many different variations and different banks that was going on. So this is where I found my passion for this. So I did work with the bank for about 6-7 years, but I've been out of the bank working in the financial side. So I was a support person for another mortgage broker out there. And I thought, oh, that looks quite good. Let's give it a whirl. So, and I've been doing this now for about 4 years. For 4 years, and as Kelly says, passion that's out there helping people at a really stressful time in their life when it comes to such a separation, and also for them first home buyers as well. So just helping them sort of travel through the maze and all the bank jargon that's out there to make it as stress-free as I possibly can do.
And I know that you work really, really well with the clients that I work with you together with as well, which is fantastic. Because as you know, as a coach, we work with our clients to clarify what's really important to them and what their interests and goals are based on those needs, wants, and interests moving forward. And often one of the big goals is to keep the family home or be able to provide two homes for the children to be able to go between and have a family in two homes. And that is one of the key areas. That's one of their important, not only financial questions, but it's also a really big financial trigger for our clients as well, because there's so much involved in how do we separate the assets? Can we afford to keep a family home? Can we afford to have two homes? What does that look like? And all that sort of work we've got to do around, working out whether that's actually a viable solution for each partner. So
absolutely,
when if I was going to start at the, I'll talk this through with all our clients, and then the next step is like, what are the experts we need to really help them understand whether they are able indeed to retain the family home. why would you say use a mortgage advisor in this area?
I think using a mortgage advisor, for one, you can have advice on multiple products from multiple banks that are out there, and it's more personalized. So we're along for the journey with you. So one, even if we've got sort of the home loan separated, we've got it all settled, we're still there for that journey for you. So you've still got that one point of contact, one person that you know you can ring up or email at any point, and we've not moved on. We're still there. And when it comes to sort of the application part, we just try and break it down into stages so that it doesn't get too overwhelming. We understand there's a lot going on in your life. We're not expecting you to remember everything. So we break it down into portions. So we make it really relatable and really personable for that particular person and what's going on in their situation.
Yeah, and that's really important having that common point of contact. So, you get quite stressed if you have to speak to someone different at the bank each time. And often that's the way it works. Whoever happens to
Yeah,
be able to speak to you at the time, having that one person and being able to collate all the documentation that's needed and break it all down. It's that really great way of ensuring that your client who's working with you, Dawn, remains a little bit less stressed and can go,
absolutely.
I can do this. This is one part. As we know, going through divorce and separation, there's huge parts to it. There's a lot of different parts to it. And one of those things, buying a house or keeping the family home is one part, but it's a massive part. And sometimes it's a part that someone may not have done before. They're not used to that
Absolutely.
process. Yeah.
And I think what I tend to find when we're going through the separation process is one person has maybe have more control of the financial side and the other person not so much. So we sort of try and, like we say, make it more personable for that particular person and just help them along the way. There's no pressure. It's their time frame. And just as long as we break everything down into different portions that were out there and just make it understandable for the customers.
Yeah, that's great. So are separations treated differently by the banks?
Not necessarily, not necessarily. So the only sort of difference with the banks that are out there is obviously getting that separation agreement as the final piece. The documentation that we need to supply to the bank to get a pre-approval in place is exactly the same. So first home buyers, separations, people buying a second property. It's the separation agreement that is going to get the final tick, the final condition ticked off so that that person can move forward.
Okay, so they have to have a signed separation agreement in place before they can move forward with is that what the bank requires?
Generally, yeah. So if you've got a draft separation agreement, they can work off that, but they will
Okay.
still condition for a fully signed separation agreement so that the customer can go ahead and then settle either on their family home or a new purchase that they're looking at.
Right, because it sort of clarifies what assets that the individual has um, in terms of
Absolutely.
moving forward.
Yeah,
Yeah, because a lot of people don't know that you actually need that separation agreement to move forward with. What about when
you do. You
you need
do.
that separation agreement also for when you're buying the house, the family home off the other partner?
Yeah. So if we have a separation agreement with a set amount that the house has been valued at, the bank at that point then shouldn't require a registered valuation. If there's no sort of agreed amount on a property, that needs to come to sort of an agreement because the banks basically say a registered valuation is not really necessary at that point. It's just the agreement between the two parties on what they think it's worth and what you can be then afford to buy that second person out of the family home.
Yeah, I've just had a question here saying, do you need, how do you get pre-approval for a loan if the house hasn't been sold yet?
You can get a pre-approval subject to the sale of the house. So then that customer then knows the amount that they're looking to borrow. So we can get the pre-approval for the finance amount. And then once the house is sold, then they can shopping and that, or even if the house has been put on the market and it's getting ready for sold and they've got a settlement date, you can do something called a substitution of security. So if they already have lending at a particular bank, and one person is going to be taking that lending over, it's not necessarily that that lending has to be repaid. What you can do is you can change the name. So a substitution of name on a security is sometimes what the banks can do out there. So less of a headache for the customers that are in there if that's a particular bank that they like.
Yeah. Do you help the customers come up with options of those separation
Absolutely.
options of like the options of how you
Yeah,
work
yeah,
in
yeah,
those
yeah.
transfer
So
houses and loans and yeah.
absolutely, absolutely. So I'm within a network of people, as you will know, Kelly, that's out there where we have solicitors that we can recommend and help you through the process as well. I do sort of basically I wouldn't give any advice on the separation. I would just give advice on the home lending and the best place to go for the individual situation. So some banks have offset facilities, some banks don't. So it'd just be a conversation to say, right, what are you looking for? What do you think you're looking for? Explaining what the different products are at the bank. And then we can sort of move forward and go, right, we'll go to 2 or 3 particular banks for you and see what we can get.
Okay. And is there any extra documentation apart from that separation agreement that you need when couples are separating for
Not
the banks?
particularly.
No?
That is sort of the last bit that's in there. Yeah, there are documentations that we need, but that is same across no matter your situation. The sort of bank statements, pay slips, and things like that. That sits realistically remains the same. That's the base for the application, and then depending on what you're buying, is the additional documents that we'd need on top of that specific to you.
Yeah. Yeah. Okay. And so what happens with the interest rates once they're pre-approved?
Interest rates aren't given at that particular point. Once you get interest rates, they only last 2 or 3 days. You would need to be at an unconditional stage and know when your settlement date is to be able to get interest rates.
Okay.
And as in the current market at the moment, we're in a downward spiral interest rate market at the moment. We'd have a chat at that point. And if your settlement, let's say it wasn't till January or February, we'd sort of do with a situation of where we put you on a floating rate, and then as soon as you've settled, we can then look at the interest rates because the interest rates are on the way down. There's an OCR announcement on Wednesday this week where we're expecting a 0.5% drop with the RBN side. We've got another one in February and another one in April. So they are on, and if your settlement date is too far out, we wouldn't want locking you into an interest rate at this point, knowing that they're going to drop in 2 months' time.
Yeah. And are you seeing a lot more clients come to you now that the interest rates are starting to drop and there's that little bit more stability going on in terms of the OCR?
Yeah, absolutely. Interest rates are dropping. What banks tend to do when they're looking at a home loan or assessing a home loan, they have a stress test. And the stress test is always maybe 2%, 2.5% higher than where the current interest rates are. My personal opinion on that is it's not a bad thing because you want to know and the banks want to know that if interest rates ever get up to that amount, that this is still going to be affordable for you. That's in there. So yeah, interest rates are on the way down. We're not sure where the sweet spot's going to be because general rule of thumb, what happens is interest rates drop, property prices go up. So if anybody's thinking of sort of buying at the minute with the current interest rates, it's probably a good time because you're going to get more property for your money now as opposed to 6, 12 months down the line where the interest rates have bottomed out and the house prices have started to rise.
And I've got a question here going, what are they forecasting for the February interest rates? Do you know?
How long is a piece of string?
Yeah.
Unfortunately not. We can sort of preempt whether it's within a month. We're expecting, like I said, that 0.5 reduction on Wednesday. But we need to see how the market goes before we can sort of comment on what's happening in February. And same with the April one in there. We have a look at what the market is doing. It all relates back to the US things like that, and the wholesale rates that the bank buys them at to sort of know what's going to happen. And
Yeah.
as you know, economists can get it wrong sometimes.
Absolutely. Especially in this day and age, isn't it? They don't know what's going on half the
Mhm.
time. But yeah, so it's here's another one question come through. How are the banks treating those over 55 going through separations? So that's really important because I'm sort of heading into that area as well, just in
Area.
terms
Yeah.
of income capacity and how long you've got to work, that sort of thing.
Yeah. So, general rule of thumb, what they look at is they look to go to 70 years of age when it comes to income, but it all depends on your individual circumstances. You know, if you've got 500,000 that's sat in a pension somewhere, superannuation, they take that into account when you're looking at the term of the loan. If you've got nothing to support yourself by the time you reach that sort of 65, 70 mark, they're less likely to give you a 30-year loan. So it depends on your assets at that particular time, or what your future plans are. And that's the discussion that we have at that time.
Yeah, and it is difficult. I know I've got a lot of clients, especially if clients coming out of long-term relationships and they're almost starting again, and they haven't worked and they've raised the kids, and it becomes really difficult for what.
Scary.
Yeah,
Absolutely
really
scary. Yeah.
scary. Yeah, yeah.
Yeah.
So you
Yeah.
must get
Yeah.
a bit of that. People coming
Abs-
to you going, God, where do I start?
yeah. Yeah. Absolutely. I mean, and as long as we've got a good exit strategy for the person that we're talking to at the minute, there are ways and means of sort of going through it. You know, it's, are they looking at buying a big family home now that they'll downsize once they're, later on in life when the kids have gone? We can take all that into consideration, and we use it as a when we write a really good file note that goes up to the banks with the exit strategies and what the plan is going forward, so we give the customer the best chance to get the loan that they actually need over the term that they need as well.
Yeah. So I've got a question here. What do the mortgage advisors do differently from the
The
banks?
banks.
Yeah, that's
Banks,
really, yeah, key.
excuse me. The banks can't give you advice, and if they do give you advice, it's only on their particular products. So you've got nothing to compare it to. You've got nothing to negotiate at. And I still get people coming through that treat the banks like they're doctors and expect the best advice. And at the end of the day, the bank's a bank. They're about making money, and it's not a personal thing for them, it's a business. So the difference being is we can give advice. We can give advice on loan structures. We can give advice on interest rates. We can give advice on which bank is going to best suit their situation. And then we can go off and we can do maybe two applications, 2 or 3 applications. And that's where the negotiation comes in then, to get the best deal for the customer to best suit their circumstances.
Yeah. And that's really important. It's sort of like, the best deal is absolutely key. What we do a lot with our coaching is we really have to reality test whether keeping the family home is, the best decision as well. Do you do that in terms of your, if and you've gone to the banks, and the bank's going, oh, this
Yeah.
is not good. How do you go back to the client to sort of have that discussion?
General rule of thumb from the conversation when I'm talking to clients, we'll know whether it's going to be a deal for the banks. So I wouldn't want to prolong the pain of sending an application to a bank knowing that it's not going to work.
Yeah.
So what I tend to do then at that point and go back to the customer, and I give them solutions as opposed to going, no, the bank's not going to look at it. It's like sometimes it's a case of, well, I'm really sorry. Maybe you look at selling the family home, the profits. This is the amount that you can then borrow with your deposit from selling your current home. Is that something that could work for you when you're purchasing your next product that's in there? But it's all down to, so there's such a two sides when it comes to a home loan. There's the deposit or equity that you've got in a particular property, but it's also the servicing at the test rate. So at the minute, excuse me, at the minute we're looking at around that 8% that they use to assess the loans at, knowing that the interest rates are at 6%. So you've got to look at what's the deposit, what's the equity, is there income there to service that?
Yeah.
And that's your sort of starting point. And then if not, you sort of look into the customer's financials. Have they got a 20k credit card and a 30k gem card that they pay off every month? But the banks look at the limits on anything like that, and you have to put in a 4% monthly allowance for the limit, even if the credit card or the store card it gets repaid every month. So then we'll go back and we'll look at those sort of financial sides and go, right, can you do without the credit card? Can you do without the Gem Visa? You've got an extra bedroom. Would it be possible to take a boarder on? And but like I say, it's very individual to that particular person.
Yeah, yeah, and I know a lot of that. Well, I know there was a lot of people doing that sort of thing, is taking on a boarder or using Airbnbs in order to help with that sort of financing the
Yeah.
mortgage as well. I've got, as a self-employed single mum, I'm finding it hard to get a bank. What does it say? Sorry, my questions are coming up all separately on here. Here we
Oh, I
go.
just saw that. It
Yeah,
says,
can you get it? To get
as
a
a
bank to give me a
self-employed,
mortgage. So what can I
yeah.
do to
I
repay
mean,
my
like I
monthly
say,
mortgage? Yeah.
what can I do as a self-employed? Oh, that one's I haven't. I'm just sort of reading through, Kimberly. Hi. I don't really have a preferred provider. It would depend on what the client wants and if they want to go to their existing bank in there. What I would do is we know what the servicing calculations are like, and we'd sort of pick the best one where we know we're going to be able to get what the customer needs. So we deal in all the banks that are out there, all the main banks. There's second tier lenders as well that we can sort of go off to, but they're generally higher for servicing purposes. But it just depends on the conversation that you're having and what we can make work at that particular time. So, and let me just read this other one. As a self-employed single mom, I'm finding it hard to get a bank to give me a mortgage. What can I do to prove I can repay my monthly mortgage to get? It would be a case of going through an application and having a look at the serviceability of it, Kimberly Lee. And is there things that we can get rid of? If the bank are saying that it's not servicing, what can we get rid of that's going to help that servicing? What can we add to it, as we say, like a border? Have you got the bedroom space to be saying, yes, we can have a boarder that's going to be paying $200 a week that's on there? It's really individual and hard to sort of generalize it, but it's just worth having a conversation. There's no ties. If you're talking to a mortgage advisor, I'm thinking we should change it to a mortgage coach. I'm quite
Yeah,
liking the sound of that one
absolutely.
that's in there. It's having a conversation. Don't ever feel that you can't go to somebody and talk to them about it. It's not going to cost you anything. The banks pay us a commission, but it's just good to get good advice that's out there. And to be honest, if something isn't going to work, then say it's not going to work, and not have a red herring that's going to drag on for a couple of weeks. Best to be upfront and say, okay, let's try and get a plan in place. We need to look at this, this, and this. Maybe in 3 months' time we can go off and we can really have a look at it for you. But there's always a plan. If it's a no right now, there should always be a plan of to get you to that position where you need to get to.
Yeah, that's fantastic, because that's when, we get clients come back to us and go, this isn't an option right now, and we can, what are the next options? And to come back and say, actually, my mortgage advisor said maybe in a few months I can do this. And there was a few things that come through when they sort of get WINS payments and things as well. That those sort of, what other support payments can
Yeah,
we get to
yeah.
help with that?
I mean, I see quite a bit that come through with sort of accommodation supplement, working for families, child support. All those can be used.
Yeah.
So it's just sort of being forth and upright. And I know it can feel quite foreign to give yourself over, I suppose, that's in there. But the more information we can get, the better advice we can give you to sort of move forward and move on to that next phase of your life.
Do you often work with, the couple that's separating together to help them
I have
both?
done, yeah, I have done a couple. I done a couple that have been like that, but you've just got to be really careful with regards to privacy and just make sure that there's no such crossover. If you're dealing with a mortgage advisor that does do that, they have to let the bank know that they're working for both parties so that from a compliance sort of side on there. But yeah, I have done that.
Yeah, that's great. And Philip has asked, do you have a simple budget spreadsheet that you give to your clients? Yeah.
Absolutely, 100%. And we can go through it together as well, or they can go off and they can complete it themselves, and then we can run through it just to make sure everything works for them.
Yeah. And is
Yeah.
that them gathering the information they need for that budget?
Well,
The spreadsheet?
it
Yeah.
is. It's more of a spreadsheet. Yeah, it's things that they're already paying. That I mean, when we're doing, I need to stop saying general rule of thumb. It's my go-to phrase. In the application, it takes all that into account for them, and it gives you something called an uncommitted monthly income, which is what the bank look at as well. That's in there to say whether it's affordable. That's in there. But we can absolutely do. I do have a good budget spreadsheet that they can go through as well, just so that they have a better understanding. So what seems to happen with the application is a customer will go in, they'll put in as much detail as they possibly can, and then we set up either a Zoom or a Teams meeting, and we go through it line by line and explain everything that's in there so that they've got an understanding and they're comfortable with what's happening.
Yeah. What about in terms of your qualifications as a mortgage advisor? Because have they changed over time? I think. Yeah.
They have, yeah. So I'm just going to look at my wall. I've got up there. So I did the residential property lending strand, which helps you talk about the mortgage side as well. But sort of year and a half ago, we had to do the financial advisors. Um, Core level 5, it's called, that out there, that takes everything into consideration. It takes KiwiSaver life insurance and the home lending in there, just to make sure that we've got a full picture before we make our recommendations for loan structures and things like that.
Yeah. Yeah. Can you see Kimberly's next
Yes,
question about?
well, let's have a look. Is it wise to put your mortgage on hold when you are separating and thinking about next steps? Does it affect both parties' future lending at all? Banks are understandable when it comes to things like that, but this will show up, general rule of thumb, on a credit check for the next 6 months, and then it disappears. So yes, it can affect your credit, but as long as you've sort of got a good mitigant reason why, and I think separation is one of them, you should be fine. They'll take that into account when you come to do an application through the banks, and they're generally pretty good.
Okay. And what is that? What they call an interest holiday?
Well, yeah, you can
Yeah.
do an interest only, or you can actually have a holiday of the entire repayment. But what you need
Okay.
to remember is interest is accruing while you're doing that. Not an ideal scenario, but I understand sometimes it's needed to sort of get through that. But you can do sort of a 3 month loan holiday, where there's no interest payments and there's no principal payments. But like I said, be wary of doing that. I think it's a last resort because you're accruing interest while those home loan repayments aren't being made.
Yeah, yeah. And is there anything specific that the bank needs if that, is an option that you really desperately need, say before the house
Desperately.
is sold? Yeah, yeah.
Yeah. It's having a conversation. So that's not something that you can do through a mortgage advisor,
Okay.
unfortunately. Once you get to that stage, it's a one-on-one conversation with the bank. But absolutely, yeah, any of the banks, this is the situation where that it would be generally be approved because of that. So what they tend to do is they freeze the accounts, so nobody's got access to the accounts as well. If it's at that point, they'll freeze the accounts, no money going in or out, nobody can take out extra lending. But there is an end date. It's sort of not something that can be ongoing. And general rule is a 3 month period.
Yeah. Do you deal with non-bank lenders, and does their attitude differ from the big banks?
Yeah, we do deal with quite a few second tier lenders. I must admit, I've been very lucky over the last 6 months, 8 months that I haven't had to deal with them because everybody's been servicing at the banks now with the interest rates. Um, they don't need as much information because they're not ruled by the IBNZ. So, yeah, but it's still individual as to what a person's circumstances are that are out there. But yeah, they can be a good option to get out of your current situation. And then once you've been in it for quite, for 6 months or whatever, we try and get you back to a bank. Always try and get you back to a main bank in there. Yeah.
There's another question that's just come up. I think it might have been one that we had answered.
If your banking details appears for 6 months, if mortgage on hold, does this affect your credit rating after that? No, it disappears completely. So it won't be on any credit reports or anything like that. It's just on the banking system for 6 months.
And how often, I mean, how long do they usually allow that time? Like, what would banks do if that is that they really need to have a holiday from interest and principal? What's that sort of time frame that they'd
That time
like you
frame
to
is a
do?
3 month time frame. So you're
Yeah.
looking at sort of 12 weeks max in a 12-month term.
Okay.
Yeah.
Yeah. And at
So
least, do people ask you about that, or do
yeah,
they? Yeah, 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 yeah,
yeah,
yeah.
yeah,
And
yeah,
that's when you
yeah,
say you need to go and
absolutely.
talk with your bank and see what
Yeah.
you can do.
Yeah, I can give them the basics of what happens with the bank, but if they're at that stage, that's when they need to go to. They usually end up in the financial hardship. Not sure if that's too harsh a word for it,
Yeah.
but it's that team that you generally need to speak to go on principal and interest non-repayment.
Great. Well, that has been so educational, Dawn. Thank you so much. Is there any other little tips that you might have for those people watching out there today?
Just bear in mind, I think, if you've got a home loan, find out what the flexibility is within it. So for instance, we'll say the light blue bank that's out there. If you're in a fixed interest rate, you can make lump sum payments up to 5% of a loan balance. You can increase your repayments by $250 a week. That's out there. You can, if you instruct a loan over a 30-year term and you're thinking that's too long, what you need to do is you instruct it over a 30-year term, but you increase your repayments so it shortens the term. And then for whatever reason, if you needed to push it out again, you can do. So it's just little bits like that that we can give people, individual people, advice on.
Yeah, and that is that individual advice, isn't it? It's just like really specific to the client that walks in the door, and you're just saying, let's look at all the options. Let's try and make this happen for you, and in what stage. But I really
Yeah,
love how you say you just keep that plan going. You're going to leave with the plan. It's not, it's not the end of the world. You may not be able to get a house
absolutely.
now. Yeah, yeah. So, oh look,
No,
thank you.
but it is a plan that's sort of going forward. No, thank you.
Yeah, thank you so much. That has been really informative. And as I said, everyone, you can contact Dawn at Life Direct. And I believe Life Direct also do life insurance as well, don't they? As well as
Yeah, that's
mortgage.
a
Yeah,
separate portion that's in there. Yeah, so we're sort of life direct mortgages, and then obviously you've got your basic life direct for the insurance and things that's out there. But yeah,
yeah.
absolutely, absolutely.
So while Dawn is based in Wellington, she works all over the country. That's right, isn't it?
100%. Yeah, I do all my initial meetings are either over Teams or over Zoom. So it means you can stop in your PJs while you're eating your dinner while we actually do and go through an application as well in there. So it's all about, for me personally, it's all about that relationship
Yeah.
with
And
the
that can be
customers and
really key with, young mums who are going through separation and divorce, and
yeah,
someone's got, you got to get the kids to bed and you've got that little bit of time. And I know you're really good at that, is actually working for what the clients need at the time,
yeah,
and lunch times when people are not at work and they can't get away from work and they can do it over the lunchtime. So,
yeah, 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 yeah.
fantastic.
And I do that early evenings as well. So I work because I understand people are working during the day, so I do the early evening ones and try and catch up with people at that point as well.
Wonderful. So thank you very much. And thank you everyone who joined us tonight and for all the fantastic questions. And we will see you at our next webinar. So thank you so much, Dawn.
Thank you. Bye, everyone. Thank you. Oh.